Hello and welcome to another episode of Speaking at Real Estate. I am the Level 4 Realtor. My name is Carlos and it's great to be with you again. Today we're going to take more of an interview approach. I have a good friend of mine coming on to provide us with some key information about lending and the lending world. I'm going to bring him in right now. There we go. Carlos.
Hey.
Hey. How's it going, man? You doing good?
It's all good, man. Living the
Good.
dream. Beautiful day.
So just a little bbit about Carlos from what I know is that the man has, from what it appears on my feeds, a massive social media presence. He's on everything I'm working on. He is constantly producing videos. He teaches classes on ways to shoot, how to shoot, what to shoot, how often to shoot. He's a wealth of information on getting your social media content going and then some. I'm going to let him introduce himself a little bit and speak about what he does. And then we're going to get right down to the topic at hand. Carlos, let the world know what you do.
Just want to introduce myself. My name is Carlos Ramos. I'm with Guild Mortgage. Been in the mortgage industry 21 years, helping families throughout the state of Florida, whether it's a purchase or refinance. And on top of that, I am also a social media coach to help real estate agents and other loan officers in the industry help grow their name and brand with social media, whether it's Instagram, Facebook, or TikTok.
Excellent. And he does a fabulous job. I catch his videos and very catchy stuff, very informative. He makes you think about what you're doing and how you can improve on it. And I'm grateful to have come across him and met him and be his friend. Now, we're gonna just do a little interview and provide you some insight. Yep. That's also part of what we do, what I'm going to be doing on this channel for you. Carlos, let's hop on to, I guess, current events here with the real estate market. I'm experiencing as a realtor a lot of desire to buy a home, and a lot of hurdles involving interest rates. Like, people at that point, they're ready to go, they're ready to talk to you, they're ready to make the move. And then a lot of times when they're done talking to lenders, the news I get back is, I can't because interest this, not enough that. Are you experiencing a lot of that type of clientele right now as well?
Yeah, it's actually made me change how I ask my questions with clients. I used to do the whole process and wait till the end, asking for how much they want to pay for a mortgage payment, what their desired goals are, where they want to be. Now I have to do that a little more upfront based on where the market is currently. So if I can at least get that part out of the way, saying how much do you want to pay on a monthly basis or what you feel comfortable paying on a monthly basis, then once I get that dollar amount, I'll be able to let them know the price range they're going to be in to see if that actually makes sense for them to pay for the house,
All right.
Because a lot of people get surprised. If you're going to tell me $1,500 a month for a mortgage payment, you're going to be very surprised on how much of a house you can buy versus somebody that says, you know what, I'm okay with paying $3,000 a month. And you'll be surprised on how much that can qualify you for,
Gotcha. Now, I tend to consider you guys like magicians because you're always coming up with different ways. And one of the things, I've done a little research, I've seen some options, and I know what I know considering I'm on the realtor side of things, but I love talking to you because I grow smarter every time we have a conversation. There are options and ways out there to help people with different programs or ways to lower interest rates. And one of the ways that I came across was this concept called buydowns. Yes. Can you break down for me exactly what is a buydown? What does it do? Kind of how does that work?
Okay, yeah. So there's 3 variety buydown programs available right now. So the most common one is a 2-1, but we'll get to that in a second. So the 3 are a 3-2-1 buydown, a 2-1 buydown, and then the 1 buydown. Okay. So meaning that as for a 3-2-1 buydown, the interest rate on your first year is 3% lower than the starting rate. So hypothetically, if today's rates were 7%, which they actually are in the 7s, so your first year would be 4% starting rate. Then it goes to 5%, 6%, and then after the third year, it goes back to the 7% interest rate. On a 2-1 buydown, very similar. If the rates were 7%, it would start at 5% for your first year, 6% for your second, and then it goes right back to the 7. And then 1 year permanent buy down or temporary buy down, depending on which one you can do. If it's 7% today, then we just lower it for 6% for the first year, and then it goes back up to the 7%. So there's a variety of buy down options, the way to do it. In most cases, the seller will be responsible for the fee associated with the buy down, and that fee is going to vary on the type of loan. I'm sorry, the size of the loan. There's a formula to it, so it's kind of very hard to describe it. I have to put in the system and it calculates it first. And then what they're doing is the seller is paying the fee to lower your payment for those years that's coming up. Now, why this is a good option right now? It's because the rates are in the 7. So if we can get you into a house at a 5% interest rate or a 4% interest rate, that's going to be a benefit for you, a huge savings for that first year or second year, because what we're doing is we're hedging that amount of funds to get you ready to refinance within 2 years or so. And then that way, because we anticipate rates to drop. So why pay the 7% interest rate when you can pay 4% or 5% for the first year or the second year, and you're still making out? So it helps a lot of people feel comfortable in that lower monthly payment for buying a house that they weren't anticipating if, with a $400,000 sales price, $500,000, $350,000, whatever it may be. It just helps reduce that first initial shock that, hey, I'm a homeowner and my mortgage payment is, $2,500 versus $3,000 for the first year.
So, wow, that's a lot to take in, but
It's a lot. It's a lot.
that sounds really good.
Yeah.
The question I guess I have is, after hearing that, is what does someone have to come up with from their pocket for your typical buy down percentage, I guess? What's the calculation on that?
Okay, so the calculation will definitely vary on the loan program. So let's just say VA loan, you don't need any money for a down payment. Where FHA, you need 3.5% down. And then on conventional, 3% down for a first-time home buyer, or 5% down and above for anybody else after that. So you're not needing as much as a lot of people think, because the seller is paying the majority of the fees associated with doing the buy down program. So it just really depends on, it's going to cater for you what you're going to feel comfortable with. Plus, you also got to get the seller to agree. So since the fee could be 8, 9,000, 12,000, 13, whatever it may be, they have to agree to pay for that. So that's why usually in most cases the 2-1 buy down is pretty much the most popular one. That'll lower your rate for 2%, and then the seller pays for it. Say $8,000, $9,000 is better than them paying $20,000 to lower your interest rate.
Gotcha. And so, when does Carlos recommend that kind of strategy to a client? What kind of client would benefit from that plan the most?
It's when I get somebody that is very rate conscious, and I'm sorry, with the monthly payment. It really comes down to that. If they're saying they really want to be at $2,500 a month, but they want that $400,000 house, then I'm going to run the numbers and put some scenarios together to give them an idea. Okay, if we go this way, we may be able to make it work. Now, the issue is you still have to ask the seller to pay for that. So it's going to be up to your job as a real estate agent to try to negotiate that to see if the seller will do it. So that's really the biggest hurdle, is the seller. Hey, Mr. Seller, will you be able to pay this to buy down the rate? I will tell you that if the house has been sitting a long time and they want to sell the house, then maybe you have a good chance that they're going to say yes.
You might be inclined to. Right. Are there risks to buy down options?
There are no penalties associated with the buy down option. Risk, not really, other than you have to understand that your payment's going to go up. You're after the second year, so you have to be very prepared for that. Like, okay, my payment went from 15 to 17. Well, be ready for that, because you chose to do a buy down program, and since it's a 2-1 buy down, we have to look at that, or 3-2-1.
I'm glad you said that. I know when I did my research on it, it suggested that buy downs tend to be good for people who are like flipping houses, investing, doing something that's going to involve a quick turnaround and then sell out, so they don't experience those bumps.
Yeah, that's not the case with a buy down.
No, huh?
Yeah,
Okay.
buy downs are mostly people that are choosing to live in the house
Got it.
versus fix and flip. Those are different type of loans that you can do different type of programs with. like a DSCR loan, investment cash flow loan. That usually in the majority of cases when it comes to a buy down program, it's somebody that's actually going to be moving into the house that just needs a little extra help to get caught up for the first year.
Okay. All right. And so I guess the last question I have is
Bring it on.
when you get to that point where the mortgage starts to go up. I remember this happening to a lot of people, especially back in '08. You get to that point where the mortgage starts going up and then something happens, some unforeseen incident, life changes, you know how
Yeah.
things go. That new mortgage payment is now a little too high, or it's higher than not anticipated, but like they're just not dealing well with that new rate. Is there a remedy down the road outside of
Well, I mean,
refinancing, I guess?
the thing is the mortgage interest rates are fixed rates
Okay.
associated with it. So the mortgage itself is what's going to adjust, but then we also have to start looking at taxes and insurance. The majority of times when the payment really has like goes up and they have payment shock, it has to do with taxes and insurance. Not much with the mortgage. I mean, the mortgage will increase, but really, if you're paying $1,700 a year for homeowners insurance when you get the loan, and then the next year it's 2,400 or 2,600. That makes a big difference in your monthly payment. So you will see an increase. We just have to look at it and say, okay, was that the mortgage? Was that the taxes? Was that insurance? What part of your monthly payment actually went up? I just had a lady today actually called me up, and her mortgage payment went up, but the mortgage portion with us was fixed. So that part didn't actually go up. Her
Right.
homeowner's
It didn't
insurance and flood
change.
insurance went up. So I advised her to make sure she talks to her insurance company to see if there's a way to make an adjustment to her policy that would help her save some money. Her monthly payment went up $300. So that was a little too much for her because that's like having a car payment every month. But also too, she forgot to look at the paperwork from the insurance company saying her payment was
Hmm.
going up.
Gotcha. Gotcha. So it sounds like buy downs are actually a pretty good option, especially if you're trying to get into a house that is pushing your financial limits, but it seems to provide you an entryway in, so long as there is some cooperation from the seller. That sound about
Yeah,
it. Sounds about
yeah.
right. All
And the
right.
good thing
Excellent.
about like the buy down program too, Carlos, is that you can get the buy down, and then if the seller's like say FHA gets 6% in closing costs, and you don't need all of that for the buy down, you can use the rest for closing costs. So that helps
Nice.
out. So the difference can help out with that.
That's great. That's
Yeah.
great. Well, Carlos, listen, I am really glad that you came on to my little show. I will
Hey,
definitely
thanks
be
for having
having
me.
you on again. As always, I consider you a wealth of information, and tonight has been no different. Um, I'm going to be posting all our information here at the end. But ladies and gentlemen, if you ever need any help searching for a home or needing financial assistance with your home, reach out to Carlos and Carlos.
There you go. I like that. That's a good one.
Thank you for hanging out with us here at Speaking at Real Estate. I'll see you again.